Let's be honest about one thing. There's nothing better than getting in early on a project and watching it moon. Yes, the tech, but also the gains. That's the real bottom line for most people investing in crypto. And aside from taking profit, feeling like the smartest person in the room is psychologically satisfying, especially with crypto, which is still in its infancy as far as the broader world is concerned. So let's say you were an early investor in Bitcoin and you rode the wave, or even if you filled your boots at $4,000 in 2019, you have probably made life-changing money and taken a bit off the table to buy that new car or build that extension. And right about now, you're probably a bit nervous. You certainly would be if you bought dips over the past couple of years expecting to march to $100,000, but find yourself staring at a reversal to sub $30,000. The question that really matters is this: where is the fresh blood going to come from? You have to assume that at this point, intrepid investors with high-risk profiles have already entered the market. And if there are more out there, they've skipped straight to DeFi or low-cap altcoins looking to replicate that initial growth curve narrative. The answer is institutional money. We've seen waves of headlines about big companies adding Bitcoin to their balance sheets, integrating crypto into their businesses, or at least becoming crypto adjacent. And regulation is playing fast catch-up too, with every day bringing a new narrative of a different regime opening itself up to crypto. It does seem like we're heading for an inflection point. Spot Bitcoin ETFs will be one marker, and while it may take some time, they're in the works. Bitcoin futures ETFs are already here after all. So, news that Fidelity will allow its 23,000 employees to allocate 20% of their 401k to Bitcoin by Q3 this year is a big but understated headline. Traditional investors love protection and are holding off on crypto for now because investing is to an extent like heading to the Wild West and going for a drink in the Last Chance Saloon. Imagine being someone with a conservative portfolio and reading these headlines about scams, bots, and hacks. Yes, the upside is amazing, but the risk is in equal measure. Best to wait until a new sheriff is in town. If the Fidelity pilot goes well and the decision is opened up to its client base, we can expect to see a surge of new but protected money entering the market, and a rush from rival asset managers to follow suit quickly afterwards. As the old adage goes, it's often not time in the market, but timing the market that matters most.